What I'm going to do is I'm going to video every evening when we meet, and I'm going to edit out the stuff where I look stupid and post the rest of it. Okay? If you say something stupid, I will ask you to identify yourself. You will be on YouTube for all eternity. My name is Roger Strickland. This is Finance 3402. I presume you are all Health Service Administration students. Our perspective on this course is not to be the complete financial manager, but to learn how financial information can be used to our advantage, or at least to cover ourselves, if you will. So anytime we're in class, certainly, there's no such thing as a stupid question. If I don't make something clear, let me know, I'll clarify. While you're working on all these problems at home, you're running into something that's an issue. If it's something that would benefit the class, post it on the discussion forum. I'm on Chapter 2, Question 4, Part C, what the heck is this? And I'll answer you on the discussion forum, so I don't have to answer it 22 times. If it's of a personal nature, just email me on Angel, on Canvas. I'll be saying Angel for the next time. But that's the way it's going to work. Now, the way I set this course up is when you get onto Canvas, you go to Pages. And there's a home page that has my picture on it. And then up on the right, there's a little listing of the different pages. And one of the pages is called Course Schedule. That's got everything in the way of videos and assignments. And I mean, you just click it right there and you watch it while you're in Canvas. It's pretty nice in that regard. Then, I've got to make sure I don't confuse my courses. Along the way in this course, and let me see when we're going to start that. I'm not sure. I may not have put them on here. Yes, they're there. Somewhere around mid-June. No, I'm sorry. Starting 2 weeks from now. This course has basically got 3 parts. Part of it is the textbook and the textbook problems. So you want to do the homework. The answers to all the problems are provided to you. They're called EOC, end of chapter. And they're selected problems. It's not like you're doing them all. You want to work those so I can throw 1 or 2 or 3 of those problems on an exam, and the numbers may be different, but the concept's pretty much the same. Make me up a balance sheet, compute a couple of financial ratios, that sort of thing. Book. Second part of the course is class, and in particular, time value of money. And for that, we're using a financial calculator. I've got mine as an app on the iPhone, but if you're going to buy the calculator, may I? The Business Analyst 2, Texas Instrument, Business Analyst 2, it's got buttons on it that say N, IY, PV, PMT, and FV. If you have a calculator with those kind of functions on it, that's present value, future value, payments, etc. That's what we're going to be working with. We're going to start on that tonight. There is a set of, well, there's an explanation, there's a series of videos, and there's a couple of sets of sample problems for you to work through. And we'll work on a few of those tonight just to warm everybody up. So you've got the textbook, the macroeconomics, and the calculator / class. We may occasionally cover something in class that's not in the text and not in the videos, so you want to check the videos of class, and I hope you'll come to class as much as you can, because I think you get more out of it that way. Okay? Now, I have asked, and I think most of the folks in this section have been pretty good about it, send me an email to let me know you're in the course. Okay? That way I'll mark your attendance down. How's this thing designed? Well, I got to remember. We've got a midterm and a final. That's it. So I'll see you in 6 weeks, okay? Bye. Bingo. We will meet about every other Tuesday. I'm trying to remember if we stay, yeah, I think we stay with Tuesdays in this class. All the way through. That's good. So that'll be consistent. Huh?
No Mondays.
No, it says for the week of on the course schedule. If you show up on Monday, you're 1 day early. You know, you can have your choice of seats. So, what's on your mind? Anybody? Thoughts, issues, comments?
Is the material mostly going to be calculations, or do we have to know the terms as well?
Calculations and explanations. So you'll need to know the terminology, and be able to, for example, if the inventory turnover on a company suddenly escalated, what might be causing that? What would you look for? And so you'd have to know, what is inventory turnover? What are the elements that go into it? How do I calculate it? And then able to explain the things that evolve from that. You know, maybe we're carrying too little inventory and it's selling so fast we're out of stock a lot. Those kinds of explanations.
What value of money are we going to build up on the material that we've learned last
We are
semester?
going to first do the material we did in managerial econ, regular lump sum and annuities and retirement planning and that stuff. And then in the second half, on the final exam, there will be another set of calculations on internal rates of return and net present values. Okay. So for those of you that have seen the calculator stuff, you're kind of a leg up on the beginning, or you think you are. How's that? Okay, anything else?
What about the textbook? Is it going to be a better reference than our managerial econ?
I'm teaching managerial econ this term, and I'm not using a damn textbook. I told you, just don't even order it, because you didn't use it. This book we will use, because all the homework assignments are in it. But it's been around for a while. You should be able to find a used copy. Hopefully not too terribly expensive. And I'll tell you what, honestly, because we only have about an hour and a half in the evenings every other week, I'm relying on you, if you have any issues, to bring them to class, particularly from the textbook, but anywhere else. And if you don't bring me questions and say, look, I still don't understand this, or I watched the video on monetary policy, and what does this mean? If you don't bring that to class, I don't really intend this as a lecture. I intend this as a problem solving. And so if you've got nothing else that you're worried about, I may just pick up with a new topic. And those will crop up in addition to whatever's on assignments. Make sure you watch this on the video from class that night. Okay?
Are you
So-
going to have like a little review for the midterm and before the final, like you did last semester?
Don't anticipate a review per se, but the class we meet before the midterm is wide open, anything you want to talk about.
Okay.
So, where do we start?
Can I just say I did not buy the book because we didn't use the book last semester. I was like, I'm not buying the book. We didn't use it at all.
Okay, now that you're behind in the class,
And you admit it on camera.
well, I'm sure Brian will loan you his. He seldom uses it. So everybody here has taken principles of accounting and pretty much managerial finance, right?
Yeah.
Managerial accounting, sorry, right? 2071. What's your impression of accounting as a field, if you were to consider employment, a career track in accounting?
Boring.
Boring?
No, I would never. Yeah.
I'm sorry?
I would never go in it.
Have too much personality for that, is that what you're saying? I understand that. I don't know what the stats are anymore, but it used to be that 46 or 48 people out of 50 who majored in accounting, 5 years after graduation were in another field.
My dad's an accountant, and he hasn't done accounting since like the second year he graduated.
What does he do?
He works for Cigna Healthcare.
Mhm.
He's anyway, he does the pharmacist stuff.
Okay, cool, exactly. You know, they say accounting is a language of business. Well, yeah, true to a degree. And so we all want to know what assets and liabilities are and what it means. Let me ask you this one. In accounting, if you're running an air conditioning company and you send a crew out to work on somebody's air conditioner and you charge them $600, okay, so far, and your crew leaves them with an invoice and comes back to the shop or goes on to the next job, what do you do in accounting when you get that invoice? How do you record that?
Well, it's a receivable, because you're billing it. 'Cause you're
Is
gonna
that a
get-
debit or a credit?
Your receivable is a debit.
Is that right?
Like
It's a
any-
credit because you haven't gotten it.
It's called resounding silence.
I know.
Yes, you're going to debit accounts receivable to the customer, Joe Smith. And what are you going to credit?
It's been a while.
Yeah, something else.
It's been a while. Let me tell you what a while means. A while is 10 to 15 years. What do you credit?
Hot minute there.
Cash?
Did you get cash?
Notes payable?
That's called a WAG. What's a WAG?
Wild ass.
A wild ass guess. And you're allowed those, but it's not right this time. You credit
Inventory.
revenue, or income, or sales revenue, or something like that, right? And it says $600. And if you're doing this on a set of books or on QuickBooks or something like that, you, the business owner, look at that the next day and say to yourself, well, damn, we made $600 yesterday, right? But did you?
No.
You did too. You made it. You ain't got it yet, right? You haven't collected for it. And if this goes on week after week after week after week, and you start showing revenues of, $18,000 for 2 weeks' work, and you're thinking, damn, I'm getting rich, I'll buy a car. Okay? What's going to happen to you?
Reality's gonna hit you.
How is reality going to hit you?
When your employees are like, hey, where's my paycheck? Your lights get turned off because you didn't pay your bills.
Why can't you pay your bills?
Because you don't actually have the money yet.
You have no cash. Okay? And so what did we call this kind of accounting where when you earn, you record revenue when you earn it, not when you receive it? What do we call that? Remember the term for that? Starts with an A. Sounds... Accrual accounting. Accrual-based accounting. You record revenue when you earn it, and you record expenses when you incur them, but you don't measure your cash. But in the real world, while you've got $18,000 in sales revenue, suppose customers have only paid you $10,000 in cash. Your bank account says you got $10,000, your revenue account says you got $18,000. If you go out and start making decisions based on what your accrual system is telling you,
You're gonna be in trouble.
you will die. Yeah, because the opposite of accrual-based accounting is cash-based accounting. And I gotta tell you, cash flow is the lifeblood of a business. And your accrued books can look phenomenal, and they might impress a banker who doesn't understand this. A few don't. It will certainly impress people who don't know nothing about accounting. But if you don't watch your cash flow, you're going to go belly up in a hurry. And I tell you this from 30 years of working with small businesses. I've seen it happen again and again and again and again and again. People who even have taken accounting, understand accounting. They understand accrual-based accounting. They start a business. They get it up on QuickBooks, which is generally accrual-based, or they set it up that way, without knowing any better. And the next thing you know, their books are telling them an entirely different story than their cash flow. Okay? So one of the things we want to kind of remember in here is all of the theory behind accounting is good stuff. Concepts like depreciation. Very useful. We want to keep that in mind. But we want to remember that when the books are set up on an accrual basis, you need to keep a second set of books on a cash basis so you know really how your situation is. And that means you're going to be setting this thing up to forecast day by day by day. Is cash coming in or is cash going out? You set that cash budget up, and you live and breathe by that. And when you're looking 30 days and 60 days in the future and trying to say, well, on that day I'll get this much money, and on that day I'll get that much money, that's kind of a wag. That's kind of a guess. So you've got to monitor it day by day by day by day by day and see how we're doing. Now, if you work for a large institution, you probably won't be troubled with these sorts of things. If you work for a government agency, you'll be running off of a budget, and they'll keep limits on how much you can spend and make you go through all the purchase orders and stuff. But in a small business, you live or die based on your cash flow. And so, as a practical matter, if you had $18,000 in sales, but you had only collected $10,000 of it, you've got $8,000 still out there as an account or accounts receivable, right? When do you know that's too big?
When it reaches $8,000.
Several ways to tell, but one general sense is, how old are they? How long have these people owed you this money? And so, if you look at we call it aging your accounts receivable. Remember that? Did you do that in accounting?
Yes.
Yeah, and you had to come out and say, how many of my accounts are between 0 and 30 days old, between 31 and 60, between 61 and 90, greater than 90, greater than 180. Now let's suppose your system looked kind of like this. Out of, what did we say, 8,000 in receivables, you got 4,000, 1,500, 100, 100, 47, 33. What's that tell you is going on?
That for a long time, a lot of people owed you a lot of money.
I would want to know the names of these people,
Flag their accounts, do
The
not
dates.
schedule.
and by the way, I'm going to call it MFR. And I would ask you to guess what that means, but I would be afraid of your answer, so I'm going to tell you. It's a memorandum for record. And that means that every time you or whoever's doing your books and making your telephone calls, every time someone talks to these customers, you write down what they say. Date, time, notation, memorandum for record.
Yeah, we have this.
Now, why do you want that, other than to be able to go to the customer and say, see, I asked you 7 times for the rent. When else will you need that?
In case it ever goes to court.
When you take them to small claims court or something larger, and you say, Your Honor, here's a record of the trend, the phone calls we made and the things that were said. And that is credible. That carries proof. Then what are you going to do? I mean, suppose you just came in to take over the business and this was the state of nature.
Correct.
Cry? Good cry. First off, you pay less for the money because they have a lot of receivables that are way old. What's the chances of collecting something more than 6 months old?
Very little.
Probably less than 50%, maybe less than 25%, okay? So maybe this $3,300 really is only worth about $700, $800. So that reduces the price you're going to pay for it. But if you came in and you found this, what would you do to go about trying to collect that money? Yeah? Give me some other thoughts. Come on, you've had people collect on you before. Come on.
Call their house 10,000 times.
It's an escalated system, and you can start fresh and say, look, I just bought the business or I just took over the business, I'm just taking this one. Here's my record, if there is any. You made this purchase on this date, and does that sound pretty correct? Yeah. That's assuming you can get them to talk to you.
Yeah.
You say, now be advised that effective today, I'm sending a letter to you and I'm letting you know that if you have not paid us this bill in full within 30 days, we're going to take it to our attorney and go to small claims court for collection. Okay? Nothing personal, but we need our money. And then, then what are they going to do in return?
Get angry.
Many of them are going to get angry because they feel guilty about it anyway. Okay? But I want to reference a book. By that title. Or something like that. It stands for there ain't no such thing as a nice guy in a small business. In this book, I ran across this book back in the mid-70s. It's paper bound, it's 8.5 by 11, it's this thick, and it's full of ways to screw people over. And it said, for example, if you owe this company $2,000, you tell, well, man, I didn't realize it was that bad. I'll have a check in the mail to you tomorrow.
No.
Ain't happening. And so when you're trying to call and collect, you're saying, what are you going to do? Give me specifics. When are you going to do it? By how much? But you're trying to pin them down. And so they lie to you 2 or 3 times, and you threaten them again and say, look, my check's in the mail right now, okay? And they send you the check, and it's for $200. And down in the little memorandum, it says PIF,
Paid in full.
paid in full.
Nope.
And if you endorse it and deposit it, what?
And you're
You've
agreeing
accepted
that
the
that's
full
paid
value
in full.
of the bet.
Then when you take them to court, they say, Your Honor, I don't know what this guy's talking about. He and I had a phone call discussion. He said if I'd send him $200, he would take that as total payment. The proof of that is the fact he cashed the check. Your Honor, I did what I said I would. I'm a damn liar, but you don't know that. Okay? So, tons and tons of ways that, you go about trying to collect on these bills. It's an interesting field. It takes a particular personality to be able to do that. You have to be able to be, no nonsense, right down to the point. You have to be able to take a lot of abuse. I spent a year doing seminars around the country to small businesses, in fact, mostly architects, engineers, and surveying firms, a lot of surveyors. Now, those are very small, usually home-owned businesses. Typically, it's a man and his wife, and most typically, the wife handled the office and the books and the collections. And generally, when the wife was handling that, their receivables didn't get in too bad a shape, because women seem to be much more effective, particularly when they're talking about their own family money. But when we would come into businesses where the guy has had turnover in his bookkeeper, what does turnover mean?
You can't keep somebody in.
You keep replacing your bookkeeper because you either hire bad quality or you're just a jerk to work for. What we would find there is you get down and to their 180-day receivables, and you'd be having a company with maybe 6 or 8 employees total, and they'd be holding $200,000 in 180-day or older receivables. And we had, we didn't have to run into this but about 4 times, and we had a standard offer to everybody we met. If you have accounts receivable of $200,000 that are over 180 days old, we will guarantee, we will make the effort to collect on those for you and keep 50% of every dollar we make. Believe me, if you collected $100,000, you'd be happy, and it wouldn't hurt me a bit. We never had anybody take us up on it. Why do you suppose that is?
Pride.
Fear. The fear that if you go out and start hassling my customers, I won't have them as customers anymore.
But you're,
Shh, hey, moose breath. They're not your customers now. They're not paying you. But people, no, don't make my customers mad. Because in that business, a lot of it's word of mouth. And if you get some of the wrong people on you against you, they can go around and really make a dent in you. So their fears were legitimate to a degree. Okay, that's a general flavor to me of what finance is about from the small business perspective. We'll try to turn to some of those topics to illustrate some of the points as we go along. I would invite you, please bring in any of your experiences as well. This to me is not managerial finance. This course to me is managerial finance. It's more about the management, and finance is our particular instrument and tool in this case. Last term for some of us, it was the economic perspectives on management and business or whatever. So that's where we're going. Trying to think if there were any other points I needed to make for sure tonight. Not for managerial econ. Those were the big ones. You got a few exercises out of Chapter 1 for next week. We'll be back here in 2 weeks, by which time we'll be into Chapter 2. And you have a few videos in macroeconomics to watch between now and 2 weeks from now. Let's spend just a few minutes. How many of you have a financial calculator with you? Not enough. Not enough to do. So I'm going to just give you a kind of a broad overview without doing any calculations. But I want you, before I see you again, to go through both problem sets on the time value of money and be sure you're comfortable using that calculator. But here's just a kind of a broad brush look at it. And there's videos as well as the handouts. What would you rather have? $100 today or $100 a year from now? A year from now? Today?
$100.
Most of you don't damn care. Just give me $100. Anytime you want to give it to me. Why would you want it today?
Because it's worth 100 today, but tomorrow could be worth less.
Why would it be worth less tomorrow?
Because
Inflation.
yeah.
What do you mean the market?
Although
That's not a word.
the value of the dollar could go down. Don't know what the future holds.
Just within the domestic United States economy, if we have inflation, prices going up, the value of a dollar falls.
You can earn money on the $100 that you.
If I had the 100 today, I could earn it. I could earn some interest on it between now and a year from now. So the closer to today I get the money, the more valuable it is. That's what we're talking about, the time value of money. If I had a choice, I can have $100 today or $100 a year from now. If I can earn 5% interest, how much would I want today that after earning 5% interest would be equal to $100? No math involved here. Let's say it was $97.42. Let's say that if I had $97.42 and I earned 5% on it in a year, it would be worth $100. Does that make sense? This is the present value of $100 a year from now. What would it take today at some stated interest rate, we would state the interest rate, to build to $100 in the future? So there's the present value of the money, and there's the future value of the money. And we will kind of dance back and forth between the two in our calculations. Simple, quick example. If I had $500 today, and I could earn 5% per year on it, which is a joke these days, but it's and I kept it for 4 years, how much money would I have in 4 years? That's where the calculator is so easy to use and such a godsend. Because I would put in 500, I would put in 5 for IY, that's one of the buttons. 500 would be the PV, present value. I would put in 4 for the number of times the money would compound or earn interest. And then I would hit calculate future value. The little apostrophe over the FV means calculate. Now there's one secret to this. Whatever you put in at present value, the future value will always show up negative. And if you put this in as negative, the future value will show up positive. So make sure one or the other was negative, but disregard the negative sign after that. Okay? Now I see a couple of you over there mashing buttons. What'd you get?
607.75.
607.75. Does that sound reasonable? What's 5% of 500? $25, right? So you're earning $25. Does that sound right? For 4 years, that's only 100. Started with 500 plus 100, that's 600, and a little, oh yeah, a little over. Yeah, that sounds about right. You see what I'm saying? 5% interest on that is $25 a year. Over 4 years, that's an extra 100, so 500 plus 100 plus a little compounding in there. I'm going to bump it up a little bit. If my answer came up $2,607, then I should say wait, right? Recalculate. If you are doing this on the calculator and you get error 5, oops. What does that mean, class? It means you failed to make one of these a negative. Is usually what it means. But if we turn this around, we can do it the other way. And we say, look, I need $10,000 in 5 years to go on my European vacation, and I can put my money away making 6%. How much do I need today? And so I would put 10,000 for future value, 5 for N, 6 for I. What would I calculate?
Present value.
Calculate what I need today, present value. And some of you are faster than I. Take a guess. Ballpark. If I can make 6% interest and I want to get to 10,000,
7,472.58 is what I got.
Yep.
I always ask at least 2 people. 7,000,
$472.58.
and you got a negative in front of it,
Right.
which I said, disregard. That sounds reasonable. 6% on 7,000, how much is that? 6% of 7,000, how much is that? 6 times 7, math, 7th grade, right? 5th grade, 6 times 7, here we go. What's 6 times 7? 42. 6% of 7,000, 420. 420 for 5 years, that's a little over 2,000. So I'm up to 94. You see what I'm saying? You can tell whether your answer is more or less reasonable. And that concludes class tonight. Is there anything else I can Come in, sit down. All right. These are just money here versus money there, what we call lump sum, fixed amount. The other variation on this is when you have a series of payments. And so if I said, gee, if I put $500 a year in the bank, and I earn 4%, and I did that for 20 years, how much would I have in the future? Now we've changed it over to a stream of payments, which we call an annuity. And so now we're going to use the payment button. Payment is 500, N is 4, no it's not, IY is 4, N is 20, calculate future value. Anybody want to take away? I'm cheating you guys. I really screwed up, I'm sorry. You deserve the best we have. Come on. What's my number? Not what's my sign. What's my number? Come on, no guts, no glory. Take a guess. You got your calculator?
No.
Oh, well, you were down there mashing buttons and then looking up at me, and I thought, well, you're ready.
I'm hiding. I'm hiding.
Oh. Brian?
I'm getting there. I'm trying to remember what we did last term.
Remember?
14,889.04.
Anybody else? Does that sound reasonable? 500 a year for 20 years, how much is that?
10,000.
$10,000 plus interest. And in fact, interest compounded on itself. That sounds pretty close to me. Anybody else can prove it?
Are you kidding?
Yeah.
Let's assume this to be true because Kate, you don't usually lie to me. Okay? So what have we done there? We've taken a stream of payments and calculated what it'll be worth in the future. We could turn it around and say, look, if I wanted to have that $10,000 for my vacation and I had 6 years to save for it and I could earn 4%, how much per year do I need to save? We can just turn it around. That's future value, calculate present value. It's real plug and play, monkey see, monkey do, nothing really complicated if you do it a few times. Then this should be the easiest part of this course. Just a little practice. Yeah. Assuming it's on the exam. Good. Yes, ma'am.
Okay, the late girl doesn't know how to use her calculator.
You don't know how to use it. Okay.
If I get the numbers, but I don't know.
Over half the people in the room don't even have the calculator tonight.
Okay.
So what I have done, when you go to Canvas and you open up the course schedule page for this thing, it's got videos on how to use it, it's got written explanations on how to use it, and it's got 2 problem sets to practice. Do those and I'll see you in 2 weeks and make sure it's right. If you have issues along the way over the next 2 weeks, post them on the discussion forum so everybody can see what we're doing. All right, that concludes what I wanted to cover tonight. Is there anything else on your mind? Any
Is that the
concerns?
first part of the course?
I'm sorry?
The calculations?
What about it?
Is that the first part? There's 3 parts of the course. You said there's the book.
There's the book,
calculations.
the calculations, and the macroeconomics. And
So
there's
this
part of
is-
all of that for the midterm and some more of all of that for the final.
Okay.
Good. All right, anything else?
So don't really concentrate too much on the review questions that's in the book. More or less look more at the homework, the problems, and
Yeah.
how it worked out.
There are selected problems for each chapter. Concentrate on those problems. And
Okay.
those are definitely calculation and explanation. Okay?
And learn how to work the calculator.
And learn how to work the calculator. You got it. Okay, anything else? Something I am going to ask you for in a week or 2 that's not on here is I'm going to ask you for a little bit of an autobiographical sketch of yourself. I'd like to know a little bit about you, where you're from, well, why you're studying the HSA program, what your latest felony was, what they call you down at Cafe you study, Big Brian.
Really?
I just like to feel comfortable, and my biographical sketch is on the Canvas thing. You can read a little bit about me, and maybe we'll be more comfortable with each other that way. Okay, anything else? It's been real. Bye.